May profits be upon you. How are you doing? All right, I just finished 3 videos. The FX futures weekly outlook, the Euro USD weekly forecast, and the GU, the pound USD weekly forecast. And now I'm doing the NZD, New Zealand dollar USD weekly forecast. All right. First, let's take a look at the calendar. Let's see what's on the horizon. Whether we got something important to look out for with New Zealand dollar or with the USD, right? Aussie has news on Monday, but that's not New Zealand. US dollar CPI Wednesday. Very important, very important. This is why I want you to wait until Wednesday to take this trade. All right, watch the analysis. Look at the trade idea, and I'm going to ask you, I'm requesting that you wait until Wednesday. Got it? All right, because this is going to be important. This is probably going to see strength come into the US dollar. All right, especially if we, get higher than expected numbers and whatnot. Okay. Let's see. Higher expected numbers should be seen as positive, bullish for the US dollar. Got it? Easy. Well, that's if them numbers coming higher, right? All right, now let's take a look at the RT money meter. The RT money meter tracks the rate of change of each individual currency future over a 15-week period. I update this every week, and this allows us to put the strongest currencies against the weakest currencies. US dollars last week was at 544, ranked number 1, still ranked number 1 at 521. A marginal and negligible change in strength. However, if we go down to the New Zealand dollar, this is the weakest of the 8 currencies. All right, last week it was at minus 732. This week is at minus 587. We got a little tick to the upside. It's ticking up to the upside, but it's still the weakest against the strongest. And that's the bottom line. All right. Now let's take a look at this this chart. First, I want to take you to the weekly so that you can see we've been nothing but bearish. Lows, again with this, lows being taken out, right? With lower lows and lower highs, right? All the way down. I'm just drawing squiggly lines. All right, but the important point is the lows are being taken out and the highs are being protected. Got it? Boom, boom, boom. When you see this market structure breaks, that means the market is bearish. We got another break of market structure here. We are still bearish. And where do we run? On the weekly, we ran into a weekly zone of demand. And this is what we're responding to right now. Okay. Let's go to the daily. All right. And on the daily, again, you could see for days upon end, days without end rather. All right, we've been very, very bearish, breaking structures, breaking major structure on the way down. This was a great sign that price was going to continue bearish because it came back up and tested the breakout zone here, and we fell even further. All right, bearish, bearish, bearish. So far, so good. Now, what I want you to notice here is after this last break of market structure, this wasn't the break for me. This was. Why? Because you see this wick coming past that low. Yeah, we made a new low, technical. All right, technical. But we didn't have a break of a candle body close, a break and close of the candle body below that low. Once we do that, price is convincing me. It's convincing me that it wants to go lower. Now, you might ask, well, what about this, man? You know, this pullback. All right, that's all it is. It's a retracement because price moves this way in a downtrend. Impulse down, a correction up. An impulse down, a correction up. Impulse down, correction up. And then another push down. That's the way the trends work. All right. And that's what we're doing right now. We are in this impulse, and this is the correction. Can you dig it, man? Okay. So what did we pull back to? Look at that. That's a daily zone of supply. All right. We did not get a break and close of a candle body above that high. So the supply held. It fought. It came back again and then fell again. All right. There was a fight there. All right. So let's look at 4 hour so we can get down to business. What I want you to notice right off the bat, as soon as I come on, man, as soon as I come to this page, the first thing I notice is this. Head and body, head and body, head and shoulders, head and body. What am I talking about? Head and body, neckline. But I'm looking for a break and close below this line. All right. What would that represent? First, look at this. This is supply. All right. Look at the support here. Look at the support here. Look at the support here. All right. There's a reason why that support is there. It's on a demand zone, this demand zone here. All right. And price has come back to this demand zone. Come on, man. Work with me. Price has come back to this demand zone. All right. 1, 2, 3, 4 to mitigate. All right. Now, I want you to know that this is a failed attempt to make a new high. Okay. What does this mean? What does it mean for these highs? Weak. That is a weak high. That is a weak high. Do you understand that? That is a weak high because it didn't. What am I talking about? It's a weak low because it didn't make a new high. I'm sorry. Excuse me. I'm a little daffy. I've been at it for a while. All right. I've been at it for a while today. So because it didn't make a new, it didn't break that low. All right. And pulls up here short, then this becomes a liquidity target. Do you understand? That's the break. That's the breakdown. We have this support here. We have this support here. We're about to break the support here. Where you see that green line, that's liquidity, man. Liquidity. And price is going to come for this sell side liquidity on all these points. Price is going to come for that sell side liquidity. All right. We had a sweep of the highs here. Boom. All right. We had that sweep. Took the liquidity from up top. Now, because of that failed attempt, I'm inclined to think that price is going to come down low. Okay. Now, what shall we see up until Wednesday, CPI data news announcement day? All right. What we can see, what we might see is price. See this big old impulse imbalance. Price will probably trade into this imbalance to this 4 hour zone within this daily zone here, this 4 hour zone here. All right. Now, maybe we might sweep and then come up to the last unmitigated zone, the last unmitigated 4 hour zone. But this is where I'll be looking first. Of course. One more. Boop. Okay. I'm looking at this. Again with this. Again, I'm picking the wrong one. All right. I'm looking at here. I'm looking at that zone right there. All right. Now, this is a 4 hour zone within a daily. Should be pretty strong. Okay. And I'm looking for price to come up here, drift up and then round over, give us our break of market structure, you know, an internal break of a low, and then start rounding over and heading down. Right. There is imbalance down here. So I'm thinking that all of this is going to be taken out for liquidity. Yes. Yes, I do. Okay. So that's what I'm looking for. I'm looking for any pullback as a bear flag. All right. And I'm looking for price to give us our setup. Look for confirmations. As soon as price hits this supply zone, that's on the wrong color. As soon as price hits the supply zone, if and when, all right, I'm looking for price to give me my, come on, man, my higher high, a pullback, a higher high, a break of that low, and a return to impulse. This is going to be a high probability trade if it sets up like I envisioned. If it doesn't do it here, I'll look for it here. All right. Now, for those who are thinking to go long because they see a trend line going up or something, I wouldn't suggest it. All right. I wouldn't recommend it. But if you want to wait, if you want to take longs, wait until you see this high taken out. Wait until you see this daily zone taken out. All right. Wait until you see that daily zone taken out. I want to see it do this, right? Or breaking close above, and then mark out the demand zone that's left behind so you can take a high probability trade to the upside. Do you understand? I'm only showing you that once. Okay. Because I'm looking for the exact opposite. I'm looking for price to head down. All right. And what would be my target? What would be our target? Hey, your first target should be this low. Your first target should be this low. Okay. You don't have to, it doesn't have to be, but that should be one of your targets. All right. That'll be towards the middle of this weekly demand zone. All right. I think we're gonna be heading downtown. Okay. This looks like a head and shoulders. And I believe this demand zone is going to give way. And this would be a very conservative approach. Once price, let me show you. All right. Once price takes out this demand zone with a break and a close below these lows, a good sweep, mark out your demand your supply that's left behind so you can take a high probability trade to the downside. All right. If it comes up here, I'm taking it up here. I'm telling you right now. Boom. Okay. So that's where I'm at. That's what we're doing. That's the plan. All right. I will leave the last video I just did, the pound USD, on your screen right now. At the end of this video, I want you to like and subscribe for me. Do it now, please. Just click on that thumbs up button. All right. And subscribe and get notifications for my updates, because I give a lot of updates. Give me some feedback. Did you make money last week? Did my analysis help? Which trade did you take? Which market did you enter? I would like to get some feedback from you. Okay. It helps that YouTube algorithm. All right. So the pound USD analysis is on your screen right now. Click on that, and I will see you in the next video. Thank you for watching.